All right, so today we are going to learn how to create a balance sheet, which is one of the financial statements. What I would like you to do first is define balance sheet in your own words. To understand it, and I want you to compare it to what you thought it was. The balance sheet is a financial statement that reports assets, liabilities, and owner's equity. On a specific date. All right, make sure you write that in your notes. A financial statement that reports asset, liabilities, and owner's equity on a specific date. Now, as we do all the time, we are going to look at what a completed balance sheet looks like. This is the format. This is what it looks like before you do anything to it. So we are going to learn a little bit about the format, and I'm always going to ask you, what do you see? So pause the video, take a second, write down what you see, and now I'm going to talk about what is here. All right, so you've unpaused the video. What do you see? As in all accounting forms, you see the name of the business. You also see the title of the form. And now we see how the date is written. The date is written on a specific day, January 31st. Now, as you can see, on the left side, you have your assets written down in order and the total. On the right side, you have your liability accounts. Then you total your liabilities. Then you have your owner's equity section, your capital amount. You will add total liabilities and owner's equity, and then you make sure that these two figures balance, because your assets must equal your liabilities plus your owner's equity. So you are adding it here. That's why the balance sheet and the definition of it is it reports your assets, liabilities, and equity on a specific date. So how do we create it? We are going to look at the worksheet. I've just put the balance sheet section in because that's all we're going to work with right now. We are doing it for All Pro Painters. That's the name of the business, for fiscal period ending April 30th. So I want you to rip your pages apart if they are stapled together. We are going to have this side by side. And then near the end, I'm going to explain to you what a statement of owner's equity is and how it relates to the balance sheet. According to this, the first thing we have to do write the title of the business, All Pro Painters. We know it's All Pro Painters because it told us over here. April 30th is the date. Balance sheet is already there. We'll just pretend we're fast forwarding. Now, according to the way that the balance sheet is set up, assets are here. And then we are going to list all of the assets that are on the worksheet and the amounts here. So your assets, I'm trying to get this. We have cash first for $4,750. We then have our petty cash for $75. We have accounts receivable G. Mackerman. There's not enough room, so we're going to abbreviate AR-GM. And he owes us $825 because it's a receivable. Then we have accounts receivable for RW, $715. The next account is supplies. Remember, this is a video. You can pause me if I go too fast. $110. And then we're going to do prepaid insurance. For $320. Now we're going to total these. Just as this shows here, we write our assets, put our total assets. Take your calculator, add them up. 4750 plus 75, 825, 715, 110, 320. $6,795 is our total assets. Now it's time to look at the liability and capital part. So now we are going to write liabilities centered. We are going to write the two accounts payable accounts. It looks like those are the only liabilities that we have. So we're going to do account payable A/P-BS for Belmont Supplies, $275. Then we're going to go accounts payable LP for Lugert Paints, and that is $490. Then we are going to put total liabilities here and add up our two liabilities. $765 is what you should have gotten for your total liabilities. Now we're going to do the owner's equity section. Now, if you look at this, we've got DS Capital here. But in order for you to get the ending owner's capital account balance, you have to take into consideration these things. Did the owner make a profit because it is his? And did he take anything out in drawing? So in order to do that, we are going to create a statement of owner's equity. A statement of owner's equity reports the changes in the capital account for a proprietorship for a period of time. So you are going to look at the beginning capital amount, comes off the worksheet. We have $3,500. Then, according to the form, we have to add or plus the net income. Net income, according to the worksheet, is $3,730. Now we have to less the drawing, whatever the owner withdrew. Under the drawing account, it is $1,200. In accounting, if you're subtracting something, you put it into the parentheses. Now you take your calculator, 3,500 plus 3,730 equals, then you minus the $1,200. So the owner's ending capital account, after you can take into consideration everything that happened during the fiscal period, is $6,030. This $6,030 now gets written here. $6,030. Now we're going to do total liabilities plus owner's equity. You add the $765 plus the $6,030, and let's pray that it matches and balances to our assets. $6,795. We balance, so we double rule, and that's how you do it. Now, in order for you to do the at-home work assignment, you are going to do it for A1 computer repair for the fiscal period ending October 31st. Here is the worksheet. Here is your empty balance sheet, and your statement of owner's equity is here. So you go ahead and do that, and then you can turn it in. All right, I will see you guys next class.